Hey guys, hope you're all doing very well. I just quickly wanted to make this supplementary teaching video. So this is the section where we just add all of the supplementary teachings. So it's not necessarily a core aspect of the, well, it's part of all the concepts of the course, but it's just an added section where you can go and refine or recap or just go through some of the concepts again. So in this video I'm just going to talk a bit about higher time frame to lower time frame and just directional bias mainly, and looking at using liquidity for directional bias. And I hope this will make sense, and I hope this will give you a cool, clear understanding. I do believe it will. So some of these concepts are probably you've heard before, so I'm going to say the same thing over and over again until it really makes sense to everyone, for all the new members, for everyone joining in. So basically, let's jump into it. So just pound US dollar, just how do we need to think about liquidity and direction? So as you know, I'm just going to make that note here again. So the main liquidity areas that we look at is imbalance, order block, and then previous high and low. So those are the main things that we need to identify, and also in that order. That's also important. Firstly, imbalance, then an order block, and then previous high and low. Let's just make it like this. So we have the as you can remember, the list of things, liquidity. So we have that as well, but I'm just going to focus on these three main concepts more or less individually. Not really individually, but just you understand now. So how do we need to think about liquidity and direction? That is an important question we need to ask ourselves. Is how do we apply? Okay, we know order block, imbalance, old high low, but how do we apply it to the time of the day, session opening, and the direction of what we're trading? How do we know the direction that we should be trading? So this method that I'm going to be showing you is actually very simple. It just takes practice, and some of the times you'll trade and then you'll make some mistakes, and then afterwards you'll see, oh, okay, well, this is actually what's happening. This is actually what I was supposed to be doing. So let's start off and just we have our 20-day look back. We take our, I'm just going to use this too because, okay, so we have our low and our high. So that was the range that we were trading in, and we identified beginning of the week on the analysis. We identified, so we need to identify the first order block, imbalance, order block, previous high and low in the discounted area. So in the discounted area, we mark out those areas first. So in the discount, do we have imbalance? Well, a small bit, you can see over there. Let's just make this a bit thinner. Yes, we have some imbalance there, and there as well. So we have an area of imbalance, and we can just, for completeness, I put the line, put the arrow there, imbalance. And then we're looking for an order block as well, and then we have an order block, and then obviously the previous low, which is in that area as well. So we can just mark that as previous low. Sorry, let me just get there. Previous low. Right hand side. So those are the first imbalance, order block, and previous high and low within the discount. There are more. We can possibly see there's another order block, and so on. But we need just to identify the first ones in the discounted area. And as you can see, that's then where the liquidity is drawn to. So we see price drawn towards the imbalance, we fill it, the order block, we fill it, as well as we see sweep the previous low, and then we see the big expansion towards the upside. So we can take buys in this area. That's where we look for buys. We look for buys in this area as we take a confirmation trade. So we're just going to look on 1 hour and 5 minutes. If we look at the 5 minute in that area, let's quickly find that. Okay, so let's dissect and analyze what happened here. So this was around New York Open, and we just see exactly the time zone, New York. This is when New York Open. So this was a sell-off in New York session. So we're not worried too much about this move down because this basically happened after our trading session. So we're not too worried about that. But the main thing we need to be concerned of is how does price react around our areas and what kind of reaction do we see in the evidence then going forward. So we see price going down and then we see breaks in structures. A structure break followed by another structure break. So we can now see from a higher time frame point of view, even like a lower time frame point of view, price is showing intent to go higher after this big push down and structure break towards the upside. Right, some construction workers. Then the following day, we just look for continuation trade. So this is not always going to be an entry, but we know the direction that price is going to go, and we enter on the new point A's created. So what's most important is to know that we respected the discounted area, we saw reaction towards the upside, and we're potentially now moving up higher. Where to? Towards the premium, because we reacted off the discount, we're now going towards the premium. Potentially entries, and then we get this big push towards the upside, this big expansion towards the upside, and now again, what do we need to do? We now again add. We're still in our 20 days range, remember, but we're seeing now visually an impulse in expansion and move towards the upside. So we can place our tool on it, premium and discount, and then we need to identify again first the imbalance, order block, previous high and low. So we do that again. We see there's the first one, imbalance. Where's the first order block? Well, it is in this case, there it is. And then the high and low is just lowered as well. So the rule is that price only needs to react off of the first one within the discounted area. It doesn't need to go all the way down towards the order block. If there is imbalance, that's the first place we look for reaction. We look for price to trade into. Let's jump to the 50-minute now. Let's see. Where do we have? Okay, we have our Asian session. There. High and low. So remember the projections that we spoke about in the previous video? We can now apply tool from the close towards the close. What do we see? 1.5 blocks, 1.5 blocks within that area. Okay, so we have the line there. We can also take 50% of the zone. We have it there as well. 50% of a zone is also a confluence in itself. So we have 1.5 blocks, we have 50%. Look at how narrow and how close we can get into, how precise we can get. Next, we have to add time of day. So let's plot out London Open, Frankfurt Open, and New York Open. Look at that. I mean, this is art in its rarest form, in its most purest form. This is art. Frankfurt Open, price consolidates a bit. Just before London Open, price pushes down. Where to? In the discount, in our first area, first zone, which is the most important one, the imbalance. Then also 1.5 blocks projection. I mean, look at that. There's our entry. Stop loss just below. Where's our take profit? Now, this is where it can get really, really nice. Our take profit should technically be, we've placed our entry from a 1 hour point of POI. So technically our take profit should always also be at a 1 hour area of interest, which is imbalance order block, previous high and low, within the premium area. So we know this whole box, let's just shade it in. This whole box is our premium area. We want to see where can price reach into for, first of all, imbalance, order block, all the high and low. So no imbalance, no imbalance. There's a little bit of imbalance. So there would have been the first area for take profit. Then order block. So potentially this up candle. Let's just make this different color. This up candle is the order block, and then all the high and low, which is that area. So do you see how we reacted off of the imbalance order block, previous high, and a discount, and then moving. Now we just need to switch this around so we can just cut it like that. Let's just make it the color. Into our premium areas of interest, and you can visually do it like this. You can say that it's 50% imbalance order block previous high, imbalance order block previous high. So that is the order of events, the order of things that we're looking for them. So where do we take first profit? Take partials, take the trade over there. Secondly, in this order block. And thirdly, at the high, if it goes all the way. Now, that is our main position, main entry. So let's just park it on the side for now. So we've used our projection blocks. We've used the discounted points of interest. We've used the premium points of interest, knowing where price is heading to. That list is just for more refinement in different scenarios. We will get to that. Now, let's just take this away for now. It might get a bit dizzy and confusing, but let's just quickly drop to the 50-minute. Let's look at the following day. So we know what's our direction, bullish. Why? Because of our high time frame view, our high time frame analysis. We know the direction that we are supposed to be heading into. We just follow that. So every time we look for manipulation, we want to see manipulation moving towards the downside and not the upside. Upside is just continuation. Moving down is manipulation because of our higher time frame view. Remember, the higher time frame is more important than the lower time frame. So if the higher time frame says we're bullish, and we use this understanding, we use this methodology and this concepts, we apply them, we know the direction. Every time on the lower time frame we see a pullback, a retracement, a manipulation, that's when we take the buy towards the upside. As simple as that, actually, but we can't make it more difficult for ourselves. Okay, so that was Monday. Next up, new day. So let's just put this down here, just out of the way a bit. Okay, new day. Sorry, just gonna get my bearings here. Okay, over here. Where's the days now? 50 minutes. So that was, I'm just gonna put in the cyclic line so we can easily, otherwise I'm now getting confused. 6. Feels like it should be closer. Sorry, about that. Let me just then we can actually just put this on. So that was the London session. That's why I'm confused. And this is the New York session. And then we should just place for the next day. We have, not sure about the screen, what the screen is, but we have our new Asian high, Asian low, and then we're just following continuations. Oh, what I wanted to say is, oh, I remember now. It's a bit out of the session timing, but we have a structure break. We have our order block here. And in this case, remember, the same thing applies. The same thing applies. You can take the same swing points. So you can still, I just want to not make it too confusing. You can still take this swing low up until that swing high, because that is, if we did a replay, that is where price would have been. That would have been your most recent swing. Within the swing, within the swing. So now you need to still apply imbalance, order block, hold high, hold low. Within the discount, where's the discount? This is in the premium. We're not interested in that little bit of imbalance over there. We are not interested in that because that's in the premium. We don't need to look at that. What's in the discount? Order block, hold high, low. So we have the hold low and we have the order block. Because we have a structure break, so we can look for buys in this area. We can look at the 5 minutes. So that was the mistake that I made. Trading into this, the short is fine, counter trade, but should have taken profits in this area. Let's refine it still further. Now we have imbalance. We have order block over there as well. Take our buy. Stop loss should be just safe below it. And you know where the take profit is, at least at our high time frame, imbalance on the high time frame. And that is then, this might have been stopped out by spread, because we should take into account could sweep it. But nonetheless, New York trade on the way. Now, let's get to today's price action. Today's price action is where I also made a mistake again, but I want to show it out to you, and we will learn from it together. Okay, so again we have our lower time, our 15 minutes. It's not super trending, it's consolidated more or less, but we can still use the projection blocks. So we take from the low towards the high. We note we have half a projection block. We have it there. Now we need to identify, does this align with something on the lower time frame? And just so happens that it does perfectly with the order block. So in this case, there is our swing low to high. So I'm just going to give this some color just so that it's not as confusing. Just make this one. Shouldn't you be allowed to make the one? You can. You should be able to. I'm gonna make the one side a different color. I can't remember exactly how. But anyway, in this area down below, we're looking for imbalance order blocks. So we have imbalance. We have an order block. So if we mark this out now, we have the imbalance there, there, and we have the order block. So now we need to combine that and couple that with the projection block. We see 0.5 over there. One is down below, so it doesn't count. So this is the best one. So we place our trade in that area. Stop loss below the low. Could even place it below the one if you want to be safer, but in that case. And then, where's our target? As we've said before, at the highs, at the order block, at the previous high on our higher time frame target. Now, the lines can get confusing, but just stay with me, just focus. We can also use this tool for projections, projection blocks for targets. So we take on the 50 minutes, always important on the 50 minute, body closes towards the upside, look at the 2, perfect, look at 3, missed by like 0.5 pips. You see how we get the high low of the day? This is how. All there is to it. Now, in the course, we've spoken about the important values, and 1 and 2 is the most, one rejection block, 2 rejection blocks are most highly probable, they're our favorites, and if they align with a higher time frame order block like we have over here, it's golden. It's absolutely brilliant. So just look at today. London session trade. Let's take all of them towards the order block. London session trade, initial trade, 12R. New York session trade, 15R. London session trade, 8R. So 12 plus 15, 27, plus 8, 35. 35R in the first 2 days of the week, by just applying the simple concepts that I've outlined today. Guys, I hope that made sense. I hope that gives you a good understanding of how I'm trading currently, and I hope that it won't give any more confusion for the new members. So guys, I'm still struggling to know what I'm going to call this video to make it sense, like the title, but hopefully that's the least of our problems. But yes, hope it made sense. Have a wonderful day further. Have a nice one, and cheers.